This is the Rich Dad StockCast with Andy Tanner, the show that kicks 401ks in the asphalt and teaches you to be the master of your own stock investing domain. And here's your host, Greg Arthur.
All right, everyone, thank you for the show. This show is called Wartime Investing. Our last show, we did talk about trading and investing during what's going on with Russia and the Ukraine. And we got a lot of feedback from that and a lot of questions. So we wanted to kind of come back to that topic and see if we can clear up a few things. Actually, I wrote down a bunch of questions that I have for Andy. But first, I want to introduce Andy, Rich Dad Advisor, personal advisor to Robert Kiyosaki. And I do want to ask you some questions, especially in these confusing times. Bitcoin's going a little kooky, oil's going kooky. And so when I'm looking at the stock market, I don't know how to read the charts. I don't know if I buy now because it's at the bottom or if it's going to drop a lot more. Bitcoin just took a surge. Is that at the top? I have no idea how to gauge these. I can't read the charts well enough to know where we stand.
Well,
so I'm asking you for help.
Yeah. Well, first of all, let's talk about the human side of this, if we could, just before I get to that, because generally when things like this happen, whether it be a pandemic or war, whatever the case may be, terrorist attack, I'll get two types of phone calls. The first one I really appreciate, where people are like, hey, I want to defend myself. I have investments. I'd like to protect them in this time of uncertainty. I think that's a legitimate call. The other call I'm less of a fan of because they're opportunistic. Well, where's the opportunity in here? And right now, my heart goes out to really three groups of people in particularly. Number one, of course, is the people in Ukraine, where that's where the battlefield is. That's where the bloodshed is. And people are losing sons and daughters, babies, brothers, sisters, fathers. So my heart goes out to those people. We have students, I know, all over the world, many in the Ukraine and in Russia. And so just a message of love and hope and compassion. And to the degree we can empathize, I can't imagine what they're going through. The second group of people Hey,
Andy, can I stop you real quick?
Yeah.
I do want to jump in. We have here at Rich Dad, we have a publisher in Poland. His name is Bartek.
Yeah, wonderful. And I love Bartek.
He's an amazing man. And one of our employees, Mona, was talking to him, and he was just expressing how Poland has opened up their borders, and
that's the second group.
Okay, yeah. I'm sorry, I didn't mean to step on you there.
No, you hit it right on the head. Is these people? I'm seeing these images of people in parking lots with tents and food and diapers and toys and blankets, saying, "Come." We don't know. I get a little emotional. We don't know who you are, but we know you're human beings in stress, seeking refuge. That's a wonderful part of the story. So that's the second group of people. And then the third, the people in Russia. I've never been to Russia. Some of the advisors have, and I know Robert has taught in Russia. I feel that many of those people are very frustrated in that they're being held hostage, and freedom has never meant so much more to people because they are not, from what I gather, they're not getting the data and the truth of what's going on. You wake up in the morning and your bank account is basically worthless because your rubles lost 30, 40, 50%, whatever it's gone down. You're in line at the bank. Those people are worried about their welfare, their food, their gas, their things. So this is before it's an investing problem, it's a humanitarian problem. And so we just send our love to those groups of people, wherever you may be. And we just hope that freedom prevails and that independence prevails.
Andy, I have been to Russia, and it's a very different culture than here in America, to the point where if you're a man and you're smiling, you're considered incredibly weak because they live a really strong life, and the oppression there is pretty severe. This is the first time I've ever seen Russians stand up to their leader and protest. I've never seen that before because he had such a heavy hand, and he's he's such a brutal man. But
in my opinion, he's showing it now. Yeah.
Oh, yeah. But for those people to stand up and riot or protest against him,
Courage.
those people are, oh my God. Yeah. Like,
yeah. And the people in Ukraine, just human shields to say, run over me or shoot me, because I will not, I'm going to stand my ground.
Yep.
It's inspiring. So I appreciate the calls that I get from people that say, hey, I want to play some defense, less excited. I had a friend of mine who, over 9/11, he just happened to have a bunch of put options on American Airlines just because the chart, had a setup for bearishness. He had no idea that while he held those puts, he had them held opportunistically, speculatively on American Airlines. And when the market reopened after 9/11 and American Airlines gapped down to the basement, I can't remember what he said, but it was a 6-figure payday for him, and he felt sick to his stomach.
Yeah. That
he had profited off a terrorist thing. And you know what he did? He gave the money to the victims fund, which I thought was admirable. So yeah, these are things that, even though investor, I try to take my emotions out of it and just be calculating on what the right thing to do is. You cannot escape this in that vein. So I know that was kind of long-winded to start, and, we might need a word to our sponsors before we even go to the next question, but that's a big deal.
You did mention a sponsor, and one of the things I get beat up on the head is I never put a break in these shows.
Let's have sponsors. A break, and then we talked about the most important thing, which is love for people.
Yeah, but
and we'll come back talking.
Let's go on a break, and then you help us understand how to read these charts in these times, and the highs and the lows, and where to jump in and where to jump out. So cover that right when we get back from this break.
Okay.
Thanks, man. All right, so now I guess I just say, oh, hey, editor guy, I hope you're listening.
Yeah.
Sometimes when we talk to the editor, they don't edit that out. They don't hear it.
They don't watch the thing edited out. Wow.
So I hope I'm not swearing too much.
That's not too much of a tough job, I don't think. But
well, no, I think it is because,
half-hour stuff to watch.
Well, but they're so busy. Like, just from us alone, they have like 4 podcasts they got to do.
Oh my gosh, that is.
So yeah. So anyways, all right. So I guess we just did a commercial, and so I guess now I say, hey, we're back. All right, you ready?
Yeah.
All right, Mr. Editor guy. Hey, we're back. I think we left off when Andy was going to share some insights on how to know when you're at the top of a market, bottom of a market, when you should get in, when you should jump out, especially with all the craziness. Bitcoin's all over the map, up, down. Gold, I believe, is the same. So, Andy, you did promise to shed a little light on that for us.
Yeah, it is a very interesting time. You know what I'm going to do, Greg, is I'm going to shut down this stuff and restart it. So hopefully they can edit that out, because I want to be in my real account, not my fake one.
Okay. Hey, do you know what time it is? Like, how long we've been doing this?
I don't know. It's 2:16 now.
It's about 13 minutes in. All right.
I am going to use my real one. I changed my mind, or my fake one. Here we go. All right, let's get this. Wartime Investing. I should have this ready, but that's all right.
No, that's good.
You'll find this, I think, really interesting. I don't know, maybe not.
I just can't wait to see you actually share a trade.
Yeah, I'm going to do a real trade. I probably will show the exact trade of how it's set up. I won't show the money I made off of it.
Yeah.
I've already in it. I'm going to act as if I was going to do it.
Okay.
But I've already done it. And it's actually better now than it was when I got in. It's actually a better trade right now. Probably has more risk, but hey. Let me find one more thing, and I'll be ready to roll. Here it is right here. So I need to make this big. I need to copy that and just paste it here in this. And then we're ready to go. Okay. Open the clipboard. And there There it is. Okay. We're exceedingly good. All right. I'm ready.
All right.
So just maybe a welcome back or
let's start over there again. Okay. Yeah. All right. Welcome back to the show. When we left to get this commercial break, Andy said he was going to share us some information on how to know when to get in a stock trade, when to get out, top, bottom of markets. I don't know. Crazy stuff with Bitcoin and gold, and really just how to read the charts in these crazy times, because I tried and I am baffled. So Andy, why don't you come back in and give us a little education here?
Yeah. The first thing is I do with this, when people call me and say, hey, what's going to happen? What do you think is going to happen? Is I shift their context from predicting to preparation. CNBC gets rich by trying to unsuccessfully answer a question that people keep asking no matter what, which is, what's the future going to hold? And for some reason, no matter how many times we preach it, to say, look, you not only can you not predict the future, neither can I, neither can Warren Buffett, neither can anybody, because there's this insatiable desire for security and to know the future. All the talking heads, that's why we have 24-hour news. It's not news on what has happened. It's news on what you think might happen. And they talk to people and, well, what do you think Putin's strategy is? Well, I don't know. Well, what do you think the possibility of this is? So they talk more about what could happen than what is happening. And so I really do my best to help people realize there's tremendous value in preparing for scenarios and identifying maybe 4 or 5 likely ones, up, down, sideways, whatever it may be, and saying, well, here's my plan moving forward. So I have 3 things that I think about in times like this. First of all, no one knows the answer to these questions anyway, even in peacetime. And a lot of people think the problem is the war, or the problem is the government, or the problem is I don't have enough money. And, think about someone who says, well, if the war disappeared, would you be out of the rat race now? Or if the guy you voted for is in office or got in office, is that going to get you out of the rat race? Well, I don't have enough seed capital. Oh, if someone gave you some seed capital, would you be out of the rat race? So really the problem is, do I know how to invest? It is always an education issue. So there's 3 things I think about right now. Number 1 is going to be inflation. With the sanctions of Russia, we'll do this really quick.
Yeah.
Russia, they produce about 10 million. Don't hold me these numbers. I think I've got this down. I haven't researched in a while, but my memory says that they do about 10 million barrels a day and they use about 3. So they can export about 7. The U.S. uses about 17 million barrels a day. We only make 11. So we need to import 6. The Saudis, I believe, they do about 9 billion a day making it, and they use about 3. So they need to export some. And of course, Europe is just tremendously dependent on natural gas and a little bit of oil, tremendously dependent on Russia. So when you take that amount of supply out, if they do that, and right now they have not gone that far, because if they cut off Russia's oil, that really hurts Europe tremendously. And it's really tough for them to operate. And that could really cause the economic problems they're trying to cause for Russia to leak into Europe pretty fast. So they're still going to probably do business with Russia on oil, but you feel that tightening. You really do. You feel the pressure since President Biden has said we're not going to put boots on the ground. I don't know why you give away that strategy. I wouldn't say anything about what we are going to do or not do, but I'm not the president. But in saying that, what other cranks do they have to crank up? Oil would be one. So oil's going to go up, no question. In my mind, that oil's up. And that causes inflation for every business that ships anything on a boat, train, plane, car, rail, bus, whatever. And that hurts businesses because that's an expense to business. And that hurts consumers because they're going to raise their prices, which means the consumer pays more and the business will sell less items. Right. So it hurts the business, hurts the consumer. So the first thing that I prepare for is inflation. And the obvious ones are gold. The obvious ones are Bitcoin. And we've talked on this program many times about the historical usefulness of gold as a hedge and also Bitcoin as a hedge. I don't think I'd get into those speculatively right now. If you don't have them, I have both already. Am I looking to buy more of them? Probably not for me. I'm very happy with my gold stock. Not meaning gold stock, gold, my store of gold that is in a safe somewhere.
Right. But let's clarify that you're not buying it because you already have enough
Correct.
for your needs.
I'm happy with the amount I have. I'm not looking to speculate on it. I'm looking as how do I protect myself of inflation. Now, here's an interesting chart. I thought that I'd want a $10,000 insurance policy on the grocery store. And I saw this coming before I knew there was going to war because we were having inflation anyway. And so, one of the things I did is I wanted a small insurance policy on, say, well, let's say I want $10,000 more this year to buy food, which isn't a lot of money, but in fact, I did this more to teach people. I don't feel I'm going to starve, but I did this more to teach people. So one of the trades I did a long time ago, I'd say probably 6 months ago, I got into this trade, is I did a trade on something called the XLP. Now the XLP, Greg, is an exchange traded fund. And what it does is it's consumer staples. So this fund owns Costco and Walmart and Coca-Cola and Colgate-Palmolive. And basically when you go to the grocery store, you can either be an owner of the company or you can be a consumer. Well, if you're at Costco and prices are high, you're probably pretty happy if you own the company because people are spending more money there. If you're Colgate-Palmolive or Kraft Heinz, and people are buying all your stuff, you're making more money. But if you're a consumer, you're not happy. Does that make sense?
Yeah, 100%.
So part of what I do for the inflation side is I said, I want to get exposure to this XLP. And I didn't do this by buying it. I did it by, getting some options on it. And through what we call trade adjustment, we put ourselves in a pretty interesting situation to where the risk on this is if this were to fall all the way down to zero, the most I could lose on this particular insurance policy is $100. Okay. If the price of the XLP right now is sitting around 75 and I'm at about a $5,000 profit anyway on it. But if it were to go up and we were to have inflation, I'd get a little over $10,000 if it goes up. So right now it's in the middle, about $5,000. Now this particular trade I'm referring to didn't start risk-free, but through adjustment and through financial education, we got it to be risk-free. So back to prediction versus preparation. I can't tell you whether I'm going to make the $10,000 if we have inflation, whether I'm going to keep the $5,000 I've already made because of current inflation, or if I'm going to lose the $100 if we have deflation. I don't know which of those I'm going to have, but of that A scenario, B scenario, and C scenario, I'm okay with either one. In other words, if the market tanks and I lose $100, that's not going to put me in the poorhouse. If the market explodes, I get $10,000. Now that compensates me for groceries, not extra 10 grand or whatever. Or maybe I just keep the 5,000. It's not a big trade, but I did it mostly to illustrate for people what some of the possibilities are. So that's the first thing is I think I'm going to position myself and teach students how investors position themselves for inflation.
Okay, wait.
Gold and silver, but at the grocery store.
Right, but when you first started talking, I thought you were saying buy the XLP, but that's not what you're saying.
That's not what I did. I used options to do this.
Right, and did you use the call or did you use a put?
I used a combination of both. Yeah.
So the average guy can't just go and get an option on XLP and hold it for the 30 days. You really do need some education.
You knew how to do it. Yeah, this is really two call options that I showed here. I also have some puts in a different trade, but yeah, it's pretty simple. I bought some calls and then I sold some calls, and that's why my risk is so low, is I was able to sell calls for the same price that I bought them for later on, and now I'm risk-free, basically. I got $100 in risk. So that's a very simple trick, very simple to do. Doesn't start risk-free, but it's pretty easy to get risk-free when things go in the direction you felt they would. And I felt inflation would happen, and it did, based on the fundamental analysis of what the Fed's doing, the money that's printed. I felt there could be inflation, and that turned out to be lucky enough that I was right. We had 7% inflation. I think the war intensifies that. So that's the first thing. Okay. The details of that trade really don't matter. The question is, do I want to learn how to do it? If you do, I can teach you. But the mindset, the bigger picture is, what is the effect the war has? Warren Buffett said, you're going to invest your money in something over time. And the one thing he can tell you about every war, in fact, he said this when they invaded Ukraine, the southern peninsula, in 2014. They said, Buffett, what do you think? He said, well, if this escalates into a larger war, the thing I would bet on is the money losing value. So you'd want to get rid of cash and you'd want to buy something else. In his case, it's good companies. And that'll lead us to the third thing I will do to defend myself. But the first one is the idea of inflation. What am I going to do to protect myself against a falling dollar, other than buying gold, other than buying Bitcoin? I like this type of a strategy because once you get it locked in like that, then there isn't a down. Like gold has an up and a downside. Bitcoin has an up and a downside. That started with an up and a downside, but it had a very limited downside. And now the downside's $100. So, and if you wanted to go bigger, I keep things small for the easy student, but you could easily do 10 times that if you wanted. I mean, it's just more contracts you buy and sell. You could scale it down or up to whatever suit your fancy.
Right. Yeah. One of the misconceptions I've had in the past is that it's just one option you buy, and then you just sit back and wait for the money to come.
No, this is a combination of options. And it's actually, this is a fairly small trade. It's about 10 contracts. So, and we're going to do another example of 10 contracts later on when I get to the third one. So that's the first one.
Okay. Why does war make inflation?
Oil.
Okay.
Oil. I mean, think about it. As I said, if you're a business owner and you're shipping anything on a boat, train, or plane, your costs just went up. Yes?
Absolutely.
And war also disrupts supply chains, just like COVID did. If all of a sudden you can't get things shipped because supply chains are out, costs go up, scarcity goes up. So when oil goes up, that generally spills over into pretty much everywhere.
Okay, that makes sense.
Does that make sense?
Yeah, absolutely.
Yeah, so that's my prediction. But more importantly, it's my preparation because I could be wrong. Right?
Well, that's something else. You had already bought that option, and then it just happened that when the war came along.
Yeah. I mean, I had already thought there'd be inflation because of Fed policy.
Right.
All the war will likely do is exacerbate that. In reality, this was up higher before the war. It'll go down before it goes up. But I like the idea of exposure to things like consumer staples, grocery store type, Walmart type stuff, Coca-Cola, that type of stuff. That way. And I could be wrong. I mean, they maybe the inflation hurts those businesses and they go down. Well, that's okay. I've got a downside protection as well.
Right.
So it's more preparatory than trying to say I'm right. I just think that those types of stocks tend to do better with inflation than others. That's my opinion.
Right.
And I can absolutely be wrong. Wouldn't be the first time. Okay. Second thing, protecting what I already have. So it's not only about inflation, deflation, and what will happen in purchases in the future in the dollar. What do I have right now? And to do that, we have what we call hedging. And a hedge comes from a physical hedge. It's wartime investing. I mean, back in Europe, if you wanted to have a 500-year dynasty, you didn't build a brick wall because they don't last 500 years. They decay after 50 or 70. So you would get a hawthorn bush, which has these spikes in it. I mean, it's very thorny, hence the word hawthorn. And they're 6 meters wide, 6 meters high, 6 meters deep. They're huge. And they would build these hawthorn fortresses that were living walls to protect and defend the castle. And in World War II, there were so many of these that they would literally stop a tank and you can Google what's called a rhino tank. You can Google it, and they'd have these huge spades they welded on the front of the tank, sharpen them razor sharp to cut through the hawthorns because they were tank proof without the rhino tank. And so Shakespeare used the word a hedge as a protection. And that's where the word hedging your bet or hedge fund or delta hedging comes from, is the physical defense. So my second thought of wartime is how do I defend? Now, in our weekly mentor club, there's great examples of this, because the thing that's nice about our mentor club is every Monday we have a portfolio to trade, and we have no idea what next Monday will bring. We don't tell our students, well, it's wartime, market's kind of rough right now. We'll come back and teach you when it settles down. Whatever the market throws at us, whether it's a pandemic, whether it's the Fed doing nutty stuff, whether it's election problems, whatever it is, war, we have to deal with that. So one of the things we've done is we've created a hedge. And what it means is you have an investment on one side that's a big scary monster, and I might be afraid of it if I have to defend it myself. So I go buy another monster and I let them fight it out, and they neutralize each other. So what happens is the value, the net worth of our portfolio stays relatively still right now. If the market goes down, we're not hurt. If the market goes up, we don't profit. But why not just sell everything? Because if you sold everything, you got your money and you're in that same situation. Well, then you're selling your cash flow machine. And so in the fancy jargon, Robert hates when I use jargon. I do too, because you lose people, but jargon is also part of your financial education. We call it delta neutral, theta positive, meaning the change, delta, is neutralized. We have one monster fighting the other. For every stock that goes down, we have another one that's going up. For every long, there's a short. We use something called beta weighting to determine this. And so we just kind of sit back right now and say, look, we don't know what's going to happen, but we're going to take a pause from trying to increase the value of our account or worry about it decreasing. We're just going to get delta neutral. But all the dividends will still keep being paid, and all the option premiums and what we call the theta keeps coming in. So the cash flow is preserved while the portfolio stays rather neutral. And so that's been a really fun shift over the past week to show the people in our mentor club how that works, where basically you just lock everything down and neutralize your ability to make or lose as much money on the stocks, where they're kind of frozen in a way, but your time decay still continues to work for you. So that's the second thing that I think about in wartime investing or pandemic investing or, terrorism or some geopolitical mess. When volatility and fear increases and things go nuts, it's time to lock it down, time to have insurance, time to forego some gain to prevent some loss, but keep the cash flow coming. Always keep the cash flow coming. So that's the second thing.
Okay, wait, before you go to the third, you said something that's a little off topic, but you said once a week you meet.
That's called our mentor club. Yeah.
Right. But earlier you were saying with the trade, you have to be watching it to know if you need a put or an option. Is once a week enough? Like, is that enough time to dedicate to paying attention to your
stocks?
It's
not. It's not. Okay. We check in once a week and show people what we've done.
So you're doing things throughout, and then you show them.
We're not day trading. I mean, we're not glued to our computer, buy, sell, like wired up with caffeine or some crazy thing. Right. For me, generally, what happens is my general routine would be about 15 minutes in the morning, where I just check and see where everything is, and most of it's pretty much a yawn. It's like, okay, that's doing fine. That's doing fine. It's like checking on the kids, right? Oh, where's he at? Oh, he's over at Johnny's house. Okay, he's okay. Next kid, right?
Right.
During wartime, I might set some alerts on my phone. I might even stay up a little later because I'll use futures that are open 24 hours a day to hedge. So if something happened in the war, I have little alerts that can ring my phone and say, hey, this just happened to the levels. Maybe I go in and adjust my hedge a little bit. Gotcha. So there is a little bit more work to it, but I wouldn't give anyone the image that I sit and watch my computer screen all day.
Right. Okay,
That's
cool.
no life.
Thank you.
Yeah. So that's the second. So the first one is inflation against currencies. How am I going to deal with increased costs or reduction in the buying power of the dollars? The second one is that idea of hedge, protection, defense, wartime, right? It's time to defend. The third one's really interesting. I don't like this Warren. I have mixed feelings on this Warren Buffett quote because I understand what he was trying to say, but I thought his words were clumsy, which is very rare for Warren Buffett. But it says something like this. He says, I will tell you how to become rich. Close the doors, right? Don't tell anybody. Close the doors. He said, be greedy when people are fearful and fearful when people are greedy. Now, I would never sit down my son and say, yeah, greed is a great element for getting rich. I don't agree with that. I think what Buffett might have crafted and said, hey, when people are fearful, be courageous. I think that's a good Ukraine type thing right now. And when other people are overly courageous, that's the time to be fearful. And so what I do is I think, all right, what are the stocks, right? What are the stocks that I really, really like that I wish I would have bought when they were cheap? And what happens when people get emotional is they get afraid. And so they start selling stuff and the market can become undervalued. In other words, they're worried about what may happen, forces prices down way, way below what they might be for what really will happen. So for example, I'll run a fundamental analysis scan with criteria. Like I found one, I'll even give the name of it. Don't go out and buy this because you don't know what you're doing, but there's a boring company. It's a snoozer, but it's one I've wanted to add to what I do. It's not that big a deal, but they pay about a 4% dividend at the price they have right now. And if that falls down further, that could be a 5% dividend, right? 1% a month on covered calls, 0.5% a month on covered calls. You got a 10, 12% potential ROI. Who doesn't, that's okay. No debt. That's cool. So there's a company called International Paper that I ran a couple scans on. And I thought, gee, do you want to be in the cardboard box business? Because that's what they do. So when companies package their stuff and send it, they have to buy a cardboard box. It's a huge industry. They have places, they're a global company, and their stock's down. It was down anyway. Well, when the market falls, if it gets down low enough, I'm going to look at the actual financials of this company and say, well, yeah, it might be a rough spot during this wartime, but over the next 10 years, you think people are still going to send packages, and you think this war will impact the market negatively for that long? And my answer is I don't think it will. I'd like to own that company, especially it's got such a great dividend history. Now, that doesn't mean it's risk-free. That doesn't mean that I couldn't lose even more. They might not cut the dividend. That's true with it's like real estate. I don't have a guarantee that someone's going to rent the house when I put the for rent sign up, but it tends to happen more often than not. And so I go with that risk. So to illustrate how this can be done, and I'm going to make a huge, I'm going to show the most risky thing I've ever shown on this podcast. So huge disclaimer, investing is risky. You can lose every dime you put into this investment, 100%. You could lose the whole cockeyed thing. If I were to do this, I could lose the whole cockeyed thing. Why would I teach it then? Why would I teach something so aggressive? I think it's the lesson that it shows more than anything else. So if you want, I've never done this. I don't like, how I abhor advice and specific trades, because all of a sudden people say, well, Andy, rich dad advisor doing this. I'm going to go out and put my life savings in this. And then I roll my eyes and think, oh, what the hell have we done?
No, when we first started, I would try to get you. I'd try to pull it out of you.
No,
you would never.
Do that. I won't. But I think the lesson in this instance, if people can understand the lesson is more important than the trade, the concept of how I think about it, people would say, if you are going to take risk right now, how would you think about it? If you want to take a big risk with a small amount of money, how would you think about it? So first of all, let's decide how much money you want to lose. Let's just start with there. How much do you want to lose? Well, let's say there was a stock at $100 a share, and you and I wanted to buy 1,000 shares. So we're going to put $100,000 into an investment. If that stock falls from, say, $100 to 97, how much have you lost?
You're asking me to do math?
Well, yeah, if you have 1,000 shares and it drops $3, you've lost $3,000. Make sense?
Yep.
So, putting 100 grand in and losing 3,000, that doesn't shake me very much, because I might have a position of, something, maybe you got 50,000 or whatever it is. Stock moves 3%, you have those variations all the time. Okay. So maybe I say, well, maybe I'm not going to put $100,000 in, but if 3 grand doesn't really bother me too much, or someone, maybe I buy a lottery ticket and see what happens, knowing that the most I'd lose is a couple grand, and kind of roll the dice a little bit and see what you come up with. So I'll talk a little bit about how that might work in something like this. Let's look beyond the war. Is this like, there's some wars that last forever? I think the chances of peace in the Middle East are like never, because those guys both believe that God is telling them to fight, right? And I don't know which one has the real God, or if either of them do, but that's what they believe. And so they're not allowed to have peace, because the culture, the tradition, I mean, it's there, and they're right, and they can't be wrong. And so that land is theirs, and they're going to fight over that strip for a long time. But other wars have a beginning and end. You have a dictator that rises up, and wants to expand his empire, and some are successful, some are not, but the wars do end eventually, and boundaries are drawn or redrawn, and you go back to normal life. So a good example of this would be World War II. So the United States is as unfortunate as this is they're the only country in the world that's ever used a nuclear weapon in war. And so President Truman dropped, I think it was President Truman dropped 2 bombs on Hiroshima and Nagasaki in the 1940s. And that ended the war. And so they got on the deck of a ship, and they had a formal surrender, and they surrendered. And then Hitler, by all accounts, committed suicide. And you had, VJ Day, Victory over Japan, and Victory in Europe Day, and the war came to an end. Okay, what happened next? If you look beyond the war, what happened after that? What did the U.S. do, for example, to Japan after they dropped those bombs?
My understanding is we helped rebuild them.
They sent them $2 billion, which in today's dollars would be an $18 billion aid package. Why? I mean, we just bombed they were our sworn enemy. Why?
I can tell you what I tell my kids, and I don't know if this is the direction you're going. 1, now they're our ally. 2, we got to put military bases over there. And 3, this sounds a little bit negative, but in a weird way, because they owed us so much money, we owned them. We could control their actions.
Yeah. Diplomacy matters after war, right? The other thing that's important, I think, to think about is, wars are really when people who are old and leaders and supposed leaders, they make these decisions, and young men and women and citizens deal with the consequences. I haven't been to Russia, but I've traveled enough of the world. I've been to the Czech Republic. I've been to Europe. I've been to South America. I've been to Asia. I've been to Australia. Every single place I've gone, I've found people that are just like me, just fathers, husbands, wives, families, and we're all very much more alike than different. So as I look at the entrepreneur, and I believe that there's a huge spark of a desire for markets and capitalism and entrepreneurship everywhere in the world. I didn't go to Russia when the Rich Dad Advisors went, but the stories I heard of the people there and their hunger for entrepreneurship and freedom and building assets was profound. And I believe that's probably still there. I don't think they're voting for a socialist republic to come back. I don't think they want the USSR back. I don't think they do. Maybe I think Putin and his cronies want it, but I don't know. But let's assume there's some people in there. What do you think? Like, do they still have a lot of oil over there? Do they still have a lot of gold and silver over there in Russia? Do they still have things they can offer the world when this war is over? Do Do you think they'll return to business someday? Do you think there's a chance of diplomacy? Do you think there's a chance that someday there'll be a Putin gone and there'll be another leader sometime? I don't know if it's in 5-10 years. I mean, he's got it rigged. The election's rigged for him to win or be possible until 2030. But the day will come, I believe, where Putin will disappear into the pages of history eventually, and he'll either be replaced by another dictator or maybe freedom rings. So the question is do you believe in the Russian people, and do you believe in those entrepreneurs? Do you believe in those businesses? Do you believe they can sell oil once again and serve Europe? And do you think you can sell vodka again and serve, whoever's being served at happy hour?
Greg, yeah.
Right? Do you believe that there's still value for those people and those businesses? Well, if the answer is yes, then ownership is a possibility. Does that make sense?
Yeah.
In other words, is there a risk of investing and saying, hey, I believe in those companies? You're not sending them any money. You're simply, like you say, if the more ownership you have, the more control you have. Mm-hmm. As people, like if you go to Hawaii, there's a tremendous amount of Japanese real estate owned in Hawaii. And when you own it, now you have a better way you actually have more control over it when you own it than when you don't, if that makes sense.
Yeah, of course. You get voting on even how the neighborhoods run. Sure.
So there was a family, and this is long-winded, but people can tune out if they don't like it. I mean, this is what investors think about. There's a family called the Vanic family or the Vanic family, and they're a private fund. And back in 1955, 56-ish, they were a pioneer in the United States of helping U.S. people invest in foreign markets after the World Wars. After the World Wars, the 40s, they became a pioneer of your opportunity to in the rebuilding of everything. They also believed in inflation, did a lot of gold work. So this Van Eck family, it's, they're not quite the Rockefellers, but they got probably about 80 billion in assets under their management. And it's, fathers and sons and nephews, everyone that works there is named Van Eck. And in 2007, they developed a fund called the Vanic Russia. And what that is it's a fund that is structured by physical ownership. It's not done by like the oil ETFs. We've talked about those. You got to be careful the contango and the future stuff. These are actually backed by physical ownership. And they own 30 different companies in different industries in Russia. So you've got materials in there, telecommunications, a little heavy on the energy, which would make sense for Russia. And you have this basket of 30 companies. And a person can invest in those. Well, due to the sanctions, obviously these companies, their revenues are going to go through the floor, and some of them probably won't survive, but maybe some of them will. I don't know. But is it worth this? So I'll just show you. I'm going to show you their. We'll just talk about it for the people on the audio. But if you were to look at where they are, they've just been devastated. I mean, absolutely devastated.
It's like a cliff.
What's that?
It's like a cliff. It went from.
Yeah, if you were to see their chart, it would look like a cliff where they were trading just, not too long ago. Last fall, they're at $35 or so, 33, 35. It's a $5, $6 stock now, right?
Yeah. And
so here's what's interesting about a chart like this. How much further does it have to go down? There's just not much there. In other words, what's the downside risk of this? Is it big or is it little? Now, earlier we talked about having $100,000. You buy $100 stock, 1,000 shares. If it falls $3, you've just lost $3,000, right? Well, here you wouldn't have to spend $100,000. You could take $5,000, buy it, and if all 30 of them go bankrupt and this stand closed, by the way, there's been leveraged Russian ETFs that have already closed and have gone bankrupt. So this is like the most risky thing I've ever talked about here. This is absolutely casino money you'd be doing this with. But if you believe in business and you believe in the people and you believe in the entrepreneurship, and you say, look, I'm going to look past the war and I'm going to look at what Germany became after World War II. I mean, they are an engineering power. German engineering has our respect. You want to participate in German engineering. Japanese technology, you would want to be a partner and participate in that, right? And own some of that. Well, when it comes to Russia, they have such a wealth of commodities and oil, and they grow a lot of wheat over there, that these types of companies might be attractive to an investor. Well, right now they're definitely, I don't know if they're on sale or if they're going bankrupt. I don't know. I don't know the future. But let's say two things could happen. So I'm not going to predict. Scenario number one, this ETF closes and someday it goes to zero and they send out a press release that say it's over, it's done, it's gone. Anyone that had any money in this has lost it all. Okay, well, if I owned it, I just lost $5, which is the same as if you owned a $100 stock and it fell to 95 or 94, 93, and it never recovered. It's the same experience. The other thing that could happen is perhaps the war ends and perhaps Putin is replaced at some point in, maybe it's a coup short term, maybe he just dies off long term, who knows? I think people with the internet, it's really hard to be a dictator in a world where people know what freedom is. I mean, poor Putin, that dude's got to spend more time defending himself against a coup to keep his power than to be worth. All those, rich dudes with their yachts and stuff, they're more worried about being assassinated than, it's just really hard to hang on to that stuff in perpetuity, and in my opinion. So the other scenario is maybe someday this gets back up to 35, and maybe by the time my grandkids come around, it's at 100, right?
Okay,
with inflation.
Let me throw 3 questions at you.
Yeah.
One, did you really say poor Putin?
What's that?
Did you really just say poor Putin?
Yeah, the poor guy is poor. He's poor in spirit. He's poor in intellect. He's probably poor in friends. He's probably one of the poorest men in the world.
Okay, so question number 2. These are the wrong terms, so forgive me, but you're kind of banking that it's going to make a recovery.
No, I'm not. I'm preparing in case it does.
Okay. I'm
not banking on it. If I were going to bank on it, I'd put a bunch of money into it. And by the way, this is just something you could do.
No, I get that. This is not, you are not telling people to do it.
Yeah. But I'm going to show you something that's interesting about this.
Wait. I got 2 questions for you. Would you buy a leap, like a long-term? So, because you're mentioning that it'll come back, when after the war and.
No, I'm going to show you what could happen. Okay.
Yeah. So
right here, if you think about a put option, if you don't understand this stuff and tuned out, what can I say? It's financial education time, right?
I'll say it for you. Go into the show notes. There's a link in there where Andy will have webinars, free courses where he'll teach you about puts.
Teach more about this. So, basically a put option is where someone makes a promise to buy something. And so, if I were to talk about the put options on this ETF right now, it's kind of an interesting idea. Check this out. Let's say that you were willing to buy Russia for $1. Okay. You want to buy Russia for $1. And when I say buy Russia, I mean, you're going to own their oil companies. You're going to own some telecom companies. You're going to be an owner in these 30 companies, and maybe they last, maybe they go bankrupt. But, basically you could say, I'm willing to put $1. They're at $5 now, right? Where are they at now? $5.79 is where it's at now. And the market in Russia isn't even open. You don't even know where these will be when it opens again. You have no idea, high risk. But let's say I'm willing to lose $1. And so I say, all right, $1,000 I'm gonna put out there. And let's say they'll pay you 10 cents to spend that dollar. In other words, you can make a promise. Well, they'll pay you 10 cents, between 10 and 15 cents to do this. And they'll even let that account. So let's say you do 1,000 shares. That'd be $100, right?
Right.
So watch this. $100 you have. Now you need 900 in your bank account to keep the promise, right? You got 100 from them for making the promise. So you divide that by $900 in your bank account. That's what you would risk, is $900, because you get the 100 up front. That's 11% on your money, 11% on your money in 2 weeks.
That's when the option expires?
Yeah,
or
they expire 2 weeks from now. So that's 11% on your money in 2 weeks. Okay. Now, a couple things could happen. If this goes bankrupt, then you're going to lose $900. Okay. Now, what's crazy is if you want to be a more aggressive, say, well, I'll buy it at 3, they'd pay you 80 cents. So if I were to do this, I'd probably do 1,000 shares, right? I'd say, all right, you're going to pay me 80 cents to promise to buy 1,000 shares at $3. Okay. So you're going to give me $800, right?
Yep.
That means that I would only need to have $2,200, right, to be able to keep my promise to buy Russia at $3.
Right.
So my downside is $3. So let's see what that would be. $800 divided by $2,200. If you want to buy it at 3, that's 36% on that money. So a third of it you'd get back in the initial investment right there, and you'd have $2,200 at risk. And I don't know what would happen. I mean, if it goes down and goes bankrupt and they close the fund, you lost a couple $1,000s. It's a high risk deal. But if the war ended and these companies start to, do their services and offer value to the citizens of Russia, and you believe that there'll be a point where the world doesn't want to punish them anymore, and you believe there'll be a time in the world where the dictators will be removed, and you believe in the humanity of those people as entrepreneurs, then you could participate in that venture. And what'd be crazy is if you got 1,000 shares of it, if it got back to where it was, you'd have a $35,000 gain. And 20 years from now, if inflation keeps going, maybe you have $100,000 in the investment, and it was because you risked a crazy, couple grand by making a promise to buy it if it got really, 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 really cheap. Now here's the odds. If you want to know the odds,
I was going to ask you that. Yeah, you have the calculator that gives you.
I mean, we could actually do this. We could. What do you want to buy it at? You want to buy it at 3, 1, or $2? I mean,
I like the 3.
You buy it at 5 if you want, then $2 out of the gate if you want. What do you want to buy it at?
I'll do 3.
$3?
Yep. Okay,
so we're going to sell this. And they're going to give you 85 cents for that. So you're going to give you 80 cents for that. So it's $800 that you get for doing that. Okay, $800 that you get. Now let me I'll bring my computer up here to a point where we can see it. And what I can actually do is this will be a little off because the market's so volatile. This thing just got killed. But based on its standard deviation from its mean, okay? Based on its standard deviation from its mean, there's a 64% chance it never even gets to the $3. And you would just keep your $800, and over the next 2 weeks, it doesn't get low enough for you to buy it. After that, it's just the same risk you had if you own the stock, right? That would be the way it goes. You got about a 35% chance of owning it, and about a 65% chance that you just keep your $800 and it never gets that low. My feeling is I think it's going to get that low anyway, just because of how brutal it is. And I wouldn't do this unless I actually wanted to own the stock. I wouldn't make a promise I didn't want to keep. And if I own the stock and I lose it, then I deserve to lose, for speculating. But if I make a bet on those people and I say those businesses will open again and they'll begin to give value to the world again, and just like Japan, do I hate the Japanese? No. Do I hate the Germans? No. Do I hate the dictators? Yeah. But I don't hate the people that are held hostage by their own dictators. And I don't wish long-term ill on them. We're putting a squeeze on them in order for the dictator to feel the squeeze, right? But I don't have ill will towards an ordinary Russian citizen. Maybe that's not patriotic of me, but I think it's humane. I have no love lost for their leadership, but the citizens, I hope they get food for their children again. I hope that they get gas, natural gas, and heat for their homes again. I hope their phones begin to work again. I hope they work to where they get open to the globe, not just the information they're fed. So I don't know that I would do that, but if you wanted to, the better reason in this trade is not the trade. Let me come back to the big picture. I actually have done this with some American companies already. I found companies that I want to own anyway. And I said, look, if they get down this much more, I've already sold options and got paid to commit to buying American businesses. I've already done that. Whether I want to do that in Russia or not, that's how I would do it if I was going to. But that's pretty risky. That's pretty risky stuff. But
is it risky just because?
Can you see how the lesson, can you see how people would get caught up in the trade rather than the lesson? So what is the lesson? The lesson is simple. If I find something that I think I would like to own, whatever it is in the world, and I think that I have a price that I'm willing to own it at and take the risk, I can get paid up front I can get cash flow up front by promising to buy it at the price I like. And you can do that anytime. But in wartime, that's particularly interesting to me because when I run a fundamental analysis on some of these companies, I look at international paper and I say, boy, if it hits this price right here, I want to own more of it and I don't mind getting paid. That way, if it takes off without me, well, I didn't want to pay that price anyway, but I need to get the premium for the promise.
Right.
So that's a Warren Buffett deal. I mean, that's how Warren Buffett, went after and wanted to buy some of his Coke clear back in the 90s. It's a very simple strategy. So it's not about Russia. It's about the financial education of knowing how to do it. Three things: protection against inflation. That's something I care about. Not a perfect investor. I'm a student. I didn't become an educator because I was beating Warren Buffett in an investing contest. I became a teacher because I tend to explain this stuff pretty well.
Yeah.
So number one, I'm going to protect myself against inflation. And I'm going to use gold, Bitcoin, and options to do that. Number two, hedge. Got out of my head. If there's a bustle in your hedgerow, don't be alarmed now. You're just protecting yourself. It's a fortress. Delta hedging is about creating a fortress to balance the net worth and the equity, but preserve the cash flow from your theta. So you don't just sell everything. And besides, there's tax disadvantages when you sell everything. So if you want to sell anything, buy other stuff, keep it neutral. And then the other one is just if I see a company that I like to own, that I believe in, whatever your beliefs are, there's certain companies I would never buy because I don't believe in what they do. Right? I just don't believe that they're like, I don't think I've ever owned like Philip Morris. Philip Morris is changing. They say that they're going to be a tobacco-free company someday and that they won't even sell tobacco anymore. Well, when they get there, maybe I'll take a look at them. But there are some companies I don't want to own. And so, depending on how you feel about a Russian investment, if you think, no, they're all awful people, he's an evil dictator, I would never want to participate in business with those guys. Or if you say, well, I'm willing to risk a new day. I'm willing to risk hope that this thing gets resolved and that someday they're able to do that again. Obviously, Europe really needs Russia. They need them. And Russia is selling them oil because they have no choice. They need it. And so whether Russia wants to do it or not, they're kind of in a partnership where they need the money and Europe needs the energy and the natural gas, and they're stuck with each other. They're in bed with each other. So regardless of how you view the world, that's the good thing about it, is you have the freedom to choose to do what you want to do. Three things: inflation, hedge, and then getting paid to buy things at a lower price than they are now if you feel you'd like to own that business in the long run. So those are the three things that I'm doing in this unfortunate time of war. And I think we ought to close the way we open. This is a couple $1,000 here, is a few $100. It's not significant. What's significant is the learning. What's significant is the lessons, and most importantly, the love. to extend to our fellow man who are suffering, in those that are refugees, those that are under dictatorship that wish they weren't, and those incredible heroes, Romania, Poland, opening their arms to those who need the help. It's a tremendous time to be alive. Very interesting time to be a father. I didn't realize my kids would be in a Cold War. You know, I grew up in a Cold War.
Yeah.
And I guess in reality, it never really ended as long as those weapons are still there.
Right.
It probably was just not as prevalent. So that's it. Long podcast. Sorry.
No. It was fascinating.
You asked.
Well, I have nothing to add. I think you closed that beautifully. So thank you, Andy.
Hey, I love and appreciate you and all that you do with the mission. You know, our focus is to elevate the financial well-being of humanity, all humanity, no matter where you live, and no matter what circumstances you find yourself in. We're here to help all humanity.
Right.
So, thanks.
All right, Andy. Thanks, man.